We are live, I believe. Looks like we're live. Hi, everybody. Thanks for joining us. This is the first time I've actually done a live stream in, I want to say months and months, actually, but it's going to be super exciting because today it's not just me and we have a guest. Welcome, Russ. Thank you for joining me. Good to have you here.
Everybody?
Do you want to just quickly give a quick intro to anyone that perhaps hasn't seen your channel? By the way, if you haven't, please subscribe to Russ. Great channel.
Thanks. Yeah, it's always a work in progress, like everything, just like our portfolios. It's always evolving and changing. But yeah, what's going on? My name is Russ. I am from the here in my Dapper Dividends World headquarters. I don't know what that means. I just started saying it, but happy to be international. I love this. I have a Russ Knopf's Dapper Dividends YouTube channel, and if you haven't guessed, it's mostly about dividend investing, which is that's the camp I put myself in, is the dividend growth investors, with a little smattering of non-dividend stocks. But that's primarily what we talk about is dividends. And I want to help people to be a better dividend investor. And so that's what's up with that.
That's great. So I thought what we'd do today is I've got some questions for you. So I'm going to fire them at you. We can have a little chat about them. Then I've got some questions from my Discord, in particular, Discord members. They've got some great questions. So that would be amazing. And then I thought after that, we'll head to the live chat. So if anyone's watching and wants to ask myself or Russ a question, or just a general investment question, pop it in the live chat and we'll get onto that as well. So let's start with, how did you get into investing? How long have you been investing? What was that trigger for you? And just any thoughts about your investing journey?
Yeah, so I've been investing in mutual funds through my work since 2003, but I don't really consider, so we're investing, but I don't really consider it investing because I didn't even know what I was invested in. So that was 2003, did that, didn't put enough in, didn't pay enough attention till about 2017, early 2018. Wanted to just, I thought, like, you know what, I'll bet I can learn the stock market and make a lot of money. So started, like most people do, with penny stocks just because they were cheap. Then went from those, when I did poorly at that, I graduated to swing trading. And it was during swing trading that I had held United Health group, and they paid a dividend one time. And I was like, oh, that's interesting. What's that all about? I got money. And then I sold them. Side note on that was like a couple $100 a share ago. So if I would have just held them, but I was swing trading, right? It hit my limit or whatever. So anyway, during the swing trading, I got involved with NEO, which many of you are probably aware of. I bought them 2 days after their IPO in September of 2018. And it did really good the first few days. And then it started doing worse and worse. And I kept averaging down, like a bad swing trader would do. And dude, it was just awful. I was losing sleep. I was waking up at 4 a.m. to look at the pre-market to see what if it was going to jump that day. And after a few days of that, I just was like, there's got to be something different. So my grandfather, when I was little, had mentioned one time in passing, he was a very light investor, about the dividends that AT&T paid being good dividends, which is a funny thing now. But with that being said, I was just laying in bed thinking like, oh, dividends, what was that all about, doing, dividends? And like I say, Alice, meet the rabbit hole. And there I went, and I'm still down that rabbit hole, and I'm loving it, sharing what I'm learning. So that's pretty much the abbreviated version of how we got invested in, started dividend investing.
Nice. It's interesting that you started with penny stocks and then like trading, because that is so different to your mindset now, I imagine, compared to then. Would you say
miles.
That? Yeah, 100%.
Would you say
insane. That when you were doing the penny stocks and you were swing trading, what was your mindset for that? Was it just like constantly go? You didn't ever sit back and just let your portfolio, do its thing? I guess you couldn't, right?
Oh, there was no compounding effect. Compounding was not even a thought. It was literally all day long glued to my phone, like in between whenever I could. It was like I was like a junkie, constantly getting a hit. Like, like whenever I can sneak a minute, I'm looking at the phone. And it was just, it get to the point where I was like, okay, I think to be successful at this, I need to be in front of the computer and have like 4 monitors set up all day long and to successfully trade penny stocks. But yeah, and then like I said, when I learned this, the different mindset was like, so the funny thing, my fault as an investor is I fall in love with the things I buy. Like they say, you're supposed to date your trades and not marry them. Well, I would marry everything. I guess I was the investing equivalent of a Mormon. I was had the polygamous 72 wives or something, but I just did all these, so now I was like, so I just need to buy and hold and don't sell, look for the best companies. And dude, it was like a hand in glove to me. It just fit perfectly. Great song by the Smiths, by the way. I don't know if you know the Smiths. Is that before you?
Not very well. Not very well.
They're a great English band. So, sorry, I'm showing my age.
I'll have to give him a listen.
I'm 45. Steve and Patrick Morrissey, they're chaps from Manchester, which is probably igniting some fires with football. I almost said soccer. Sorry, everyone.
We better not do that.
My brain can go all over the place. Yeah.
The women's England football team won their first match today. So
really,
that's good.
Nice. Oh, they're doing that down in Australia, right?
Yes, the World Cup happening at the moment.
It's wintertime down in Australia right now. Cold. I know that because I was there with the U.S. Navy in July of 1998. Yes, long time ago. And it was snowing. There was no Crocodile Dundee. There was no beaches and surfing. It was peacoat and snowflakes, oddly enough.
I guess we always think of Australia as like the hot place, but actually they have winters too.
I sure did. I was like, where's the kangaroos? And anyway, okay, enough of that. So next.
It's funny. Okay, so it sounds like you're at the stage now where you're primarily focused and interested in dividend stocks. But I was wondering, do you have a 100% dividend stock portfolio, or is it still somewhat mixed?
No, it's very, very heavily weighted towards dividend investing. Now, like I share on the channel, there's 3 portfolios. I have a taxable account and then 2 different retirement accounts. One of them being a Roth. If you're not in the United States, you don't pay taxes. You pay. All right, let me do that. Wheel it back. So on a Roth, your money is put in after you pay taxes on it, and then the growth will never be taxed. But the IRA, you put that money in pre-tax, and then when you take it out in the future, you pay taxes on it. So there's 2 different kinds of retirement portfolios I'm using, but I have mutual funds. So I would say I'm pretty well diversified in that, and like my 401k and my retirement account that we don't share. But for what I do and share on the channel, it's very probably over 90% weighted toward dividend stocks. And the few that I don't are like Alibaba, which I'm on the fence of. I bought that one blindly alongside Charlie Munger, without doing my own proper due diligence on it. And then like a new one I've been buying, Hero Health, ticker HROW. So those are 2 that don't pay a dividend. One of them obviously really big. One of them is just getting going in Hero Health.
That's interesting. So what's your plans with the portfolio moving forward? Do you plan to keep the, most of it the majority being in dividends, or do you plan to change that at all? What's the plans going forward with this?
So the idea as of right now, and obviously all things are subject to change, but the idea right now is I just love buying and holding. I love getting the dividends, reinvesting those dividends into other dividend paying stocks to get that, what they call the dividend snowball growing, the compounding effect going. But honestly, the whole idea is trying to grow the income that's spitting off of the dividends, the cash that they're spitting out without having to sell shares. And that's always been one thing that's bothered me, thinking like if I invested in Tesla and they go up really big, then one day if I needed cash, having to sell shares. And I think like, but what if I don't want to sell shares? Then you could do covered calls and options. And of course that's a strategy, but generally speaking, I didn't want to sell stocks. I just wanted to get income from them. So that's what dividends provide.
Yeah, it makes sense. And I think with dividend investing in particular, it's very motivating to see the growth happen over time, to see the little, the pennies, the cents trickle in, and then you reinvest them, and then you get more the next time, and then you reinvest them, and then you get more. And it's like you said, it's literally a snowball. And I think for a lot of people that can be so motivating. If that's what works, then, and that's what keeps them invested in the stock market, that's amazing. Really, really, really good. What in your portfolio now, what have you been doing recently? You mentioned AT&T. Is that
Oh yeah.
a stock that you have, or?
Yes, I have too much
Okay.
AT&T, and that's
Right.
one where, oh, it's kind of like there's a book by Malcolm Gladwell called Blink, and it's about well, without getting too much into it, there's a term in psychology called thin slicing, and it means you're just kind of looking for the things that support what you want it to say. In
Yeah.
investing, I think we do that a lot. We're like, I really want AT&T to be a good stock, so I'm going to look and magnify the things that I find that are good about it, and the things that are really red flags, and be like, that might be a little bump in the
Doesn't
road, but
matter. Yeah.
yeah, not really giving it the same weight. But yeah, the telecoms, there's so many mistakes not mistakes, but things I wish I knew. And it's just in the telecom industry, at least here in the United States, it's very capital intensive. It's very competitive. And if you have to pay a dividend in that environment, when you're a business that's very competitive and have to spend a lot of money all the time, then I think it's like running a race with leg weights on. Because if you look at the big three here in the United States, is AT&T, Verizon, and T-Mobile. T-Mobile is up over the last 10 years, I think almost 500%, while Verizon is like 8.5%, and AT&T is
Wow.
-2% with dividends reinvested, and T-Mobile doesn't pay
Okay.
dividends. So I think it's given them a lot more flexibility in this
Yeah.
environment to grow quicker, offer better plans. And the funny thing is that we have a T-Mobile plan, and I don't even own their stock outright individually. So yeah,
Yeah.
I'm looking to move out of AT&T and Verizon eventually, but I'm stubborn and I hate selling for a loss. And I'll end this long long thought with saying that you don't have to make your money back the same way you lost it. So that's something I'm working on and trying to wrap my head around, is that just because I'm down 40% on AT&T doesn't mean I have to wait to make back that 40% on
Yeah.
that stock. Like I can put it into something else and make it back that way. So that's something
That's
we're learning.
that's really yeah, that's really interesting actually, because I struggle with that too. If I've got a stock that's down and I know that, might, for whatever reason, there's many reasons when you should sell a stock, but if I see that I haven't at least made them, if I'm at a loss with it, I don't want to sell it until it's at least, not at a loss anymore. But you've got a good point there. If you move it into something else and then you make the money back that way, that's good as well. So that's interesting, because that's something that I definitely need to work on for sure.
Yeah, like if I'm losing all my money playing blackjack, I'll just try and make it
Yeah.
back on roulette, We don't want to gamble, people. Maybe a little gambling is okay in the market, but not a lot. Just a little. Scratch that itch.
Great advice of Russ there. So
No,
you're
I
you're
don't know.
gonna you're gonna cut your AT&T position
Oh,
completely, or just down?
yeah. Well, it's just the money doesn't grow. It's just there's no growth
Yeah.
there. And you buy it, you buy. So the theory was buying these companies for the dividends and not for the
Yeah.
capital appreciation. But again, like I said, if you look at a total return chart, which is dividends all
Yeah.
in everything reinvested, they're just getting creamed by T-Mobile, which doesn't pay a dividend. So it's just, yeah, it's just a really, in 2013, if you would have put $1,000 into AT&T and reinvested all the dividends into more shares of AT&T, you'd have like $939 or something like that. I just was running some numbers. I don't know.
Oh
Maybe I'm a
wow.
glutton for punishment, but yeah, it's
Oh
not very good. So
yeah.
there's like we were talking earlier, there's no one perfect thing to invest in, because if there was, everybody would be doing it and it would be
Yeah.
well known. So every single thing has its upside and downside. I don't care what it is.
Yeah, for sure, for sure. That's interesting. So in terms of, let's move on to Tesla.
Mm-hmm.
Tesla's currently my largest position, and I know that in my portfolio, and I know that last time we spoke, you mentioned that you've got a story with Tesla and you had some regret about investing into Tesla. Do you want to just run us through what happened there?
listening to other people, not having my own conviction, borrowing others' conviction. And oddly enough, usually we'll borrow others' conviction to buy, but this was borrowing others' conviction to sell. And I had heard on two separate podcasts when I was, back in 2018, it sounds silly, but it's actually not. I had 2 shares of Tesla. I remember my wife and I talking, she's like, yeah, those are sharp cars and they're all electric and Elon Musk and blah, blah. So I was like, all right, I'm going to get 2 shares. They were like 200, I think right around $200 a share, pre-split, obviously. And I was going to add more. I remember thinking like, I should get up to 10 shares of this and just sit on them. Well, I listened to some people in Wall Street and, people that follow things closer than I do. And 2 of these ones, I don't want to name names, but they said, you got to get out of Tesla. There's a lot of shadiness going on, especially with their warranties. They're using it to cover up a lot of their downside. They have they're going bankrupt. They don't have enough cash to stay afloat. It's only going to be a matter of time. Like, this company is going bankrupt. It's a really bad investment. And if you stay invested, you're going to lose everything. The assets are going to get sold to something else. And then whatever Tesla looks like on the other side of bankruptcy, those shareholders are probably going to profit. So I was like, I'm being smart here. And I sold. And it just went to the moon. And I'm standing there. And, like I told you, thankfully, I have some exposure inside of mutual funds and things like that. But not as exciting, as being an individual shareholder of it. And that was it, man. That was my big lesson. Just listening to the conviction of people that I thought really knew what they were talking about. And it also taught me that nobody knows what is going to happen. I don't care who they are. Warren Buffett and Charlie Munger do not know the future. They don't know what's going to happen. So always keep that in mind, that people have opinions. Obviously, we know what you say about, opinions and people, but nobody knows what is going to happen in the future. So that was my story and the lessons I've learned that hopefully I can impart to some of you with Tesla.
Yeah, so important to do your own research and not just blindly copy. And I think if you're someone that doesn't want to research, like, that's okay. You don't have to be so interested in investing to invest. But if you don't want to research, then, don't just blindly copy. Maybe instead of doing that, look to put your money into an index fund or an ETF and just play the game that way, rather than stressing yourself out and just looking at the next YouTube video and thinking, oh, that stock looks good. I'll go and put, all my life savings in that, because sometimes you'll get lucky, but a lot of the time you won't.
Well, people found that out with Tattooed Chef, right? And there's some pretty big YouTubers with. Was that you? God, did you have Tattooed Chef?
No. I've never invested into Tattooed Chef. No, but I've looked at the charts recently, and
yeah, good. It's just to build on your point, I was actually talking with my daughters last night because for those of you watching, I have 2 teenage daughters. They are almost 16 and 15 now, which is just insane how fast time goes. But when here in America, we got the stimulus funds, also known as the stimmy funds and the stimmy checks. So for my kids, we save, I save too much, but I put all of theirs I opened up custodial accounts for them. And I gave them a list of I wanted to try and this will get them interested in investing, but it just hasn't. They just, like we talked about, for whatever reason, they don't care. They're as soon as last night, I was like, hey, I want to talk to you about your portfolio. And it was like, Ron, go, Dad's talking stocks. Like, it was like the roaches, when you turn on a light, they were like scattering. Yeah. I'm like, come here. So I'm trying to explain to them ETFs and saying, look, you need to invest. If you want to be financially free, if you don't want to work until the day you die, you're going to have to invest and you have to shift your mindset from thinking, what can money buy, to what can money earn? And that's how you can be financially free and do what you want to do, make work optional. You will have more options, but you're going to have to invest. And if you don't want to invest, if you say, hey, I don't want to invest, well, you still need to. So I was showing them VOO, trying to explain to them, saying look at all the great companies in here. You're getting, I think, 508 companies inside the VO, which is funny because it's supposed to be the S&P 500. So I'm
Yeah.
not, now I say that I'm like, I can do simple math, but anyway, and then a small cap fund with them like SCHA we were looking at, and I'm trying to explain these are companies like little companies that are hopefully going to grow into big companies. So you can get the growth on the small companies, and then you also get the big companies too. So we're working on it. It's a work in progress, Hayley.
I do think they'll come around. I think at the moment it's something that their dad's interested in. So therefore, just, it's not cool because their dad's interested in it. Whereas they'll get to a point probably when they start working that they think, oh, hang on a minute, my dad did mention this and now I'm seeing it. And then they'll want to start investing. And that'll be the moment that you get to go for it.
Yeah, funny thing. So I was trying to figure out with them, I'm saying like, why don't we sell some of the ones you're down on? Because I explained to them the Peter Lynch, right? Where he said a lot of people, they sell stocks that they're way up on and they buy more of ones they're way down on, which is effectively cutting the flowers and watering the weeds. So one of the ones that my daughter was down on, the 16, almost 16, is Disney. And she said it's like 4.5 shares and they stopped. They're going to start paying a dividend again, but she's like, why don't we sell Disney? Because it's kind of boring. They don't really have any good movies coming out anymore. And she's like, I don't know. They just don't really seem fun anymore. I was like, that's interesting from a 15-year-old that watches a lot of social media and things. But yeah, whatever that means, I don't know. Maybe she's got more insight than I do. But
well, it proves the point that if you're investing into stocks that you are genuinely interested in, you will, one, probably keep up to date with them. And two, you'll just be more inclined to do your research initially. So maybe it's a good thing. I was going to ask you, Russ.
Yeah.
Talking about emotions that are involved in investing, what would you say to people now that you've been investing for quite a while? What would you say to people in terms of how to control your emotions? Because as a beginner investor in particular, it's very hard, really, really hard.
It's extremely hard. And that's why a lot of people can't ever be good investors, right? So there's two emotions in the market. It's fear and greed. Those are the two major emotions. I've experienced both of them plenty. And it's something you just have to work on. It's different for everybody. And I mean, reading books, like studying history more than forecasts, I think is one thing that helps me and something I've been looking more into, because we can get caught up. Like, again, the human mind wants to believe that people know the future and what's going to happen. So we love looking at forecasts like somebody has insight. But I think the more helpful thing is to study history and look at market history and what has happened and look at the repeating patterns throughout history rather than looking at the future. And I think that's one of the ways that I've kind of been controlling my emotions, is just knowing that, like, okay, everything we're seeing has already happened once. It's going to happen again. It's happened before. And, maybe COVID, even then the black swan events always happen, but unless it's going to end the market. And I remember thinking of this, why it was easy for me to buy when other people were panicking in March of 2020. I don't know if you were investing then.
I had just started. So for me, I was panicking, but I stayed invested. I just didn't add more.
Good. So for me, the way I overcame that was to say, okay, if this is the end of the world and this is like the zombie apocalypse, then the market's going to go away and it's not going to matter anyways. But if it's not, if we come up with a way to help people and make people better, and the world's going to keep on going, like, this is going to recover. This would just be a good buying opportunity. So I think that's a good line in the sand of almost saying, like, well, I'm just going to keep buying, because if it is Walking Dead and the world is ended, the market doesn't matter anyway. Nothing will matter, Well, things will matter. Cans and guns and, maybe bars of gold. And even then, I don't know. What are you going to do with bars of gold in the zombie apocalypse? Throw them at the Walking Dead,
Probably use them as,
I tell you this, if it was the zombie apocalypse, everybody, I would rather have a can of tuna than a bar of gold, because what are you going to do with the gold? It'll look pretty, I guess.
Very, very true. Yeah, I really wish that I really wish I'd had a few more years in the market before the dip happened, because it's such a great opportunity. We saw so many stocks go down, great stocks down by like 70%. Like, what an opportunity that was. And I've definitely learned that if that ever happens again, oh boy, I'm going all in.
And how I was buying McDonald's at, I think, 135 or $140 a share was the cheapest I got. And I look back and it was one share, but I was buying so many other things, and now it's pushing $300 a share. It's just like, man, crazy.
Amazing. Yeah. Lesson learned for me. Right. Are you good if we go on to some questions from my Discord members?
Yeah, let's do it.
Cool. Let's do it. Okay. So the first question is the increase of interest rates that are happening right now making you feel hesitant to buy REITs? Because obviously if the REIT needs to raise capital, they could then issue new shares and therefore, dilute existing shareholders.
Yeah, I think it's going to come down to management teams for REITs. And it's definitely sucked a lot of capital away from REITs because obviously individual stocks are risky. So when interest rates rise, it definitely pulls capital away from the stock market, because if you can get what they call the risk-free rate, there's no risk in it. Like, well, I guess that your risk is the government defaulting, which is very, very low because they can just print more money. But I invest in realty income, and REITs are always going to offer shares and put more shares out to get more money. So in my opinion, as long as they're growing their revenue, their sales is growing, then I think they're okay. They're growing something called AFFO, adjusted funds from operation. It's kind of like earnings per share, but for REITs, it's a better financial metric to use for them. As long as they're growing their AFFO and the sales, then I don't really have a problem with them acquiring more businesses and growing their business that way. So no, it really hasn't made me that hesitant. And I know there's a looming commercial real estate bubble, or they're thinking that there's going to be a lot of refinancing not happening because of the increased rates. So we'll see what happens with that. But I think well-run companies are going to find a way to navigate, and it's important. And hey, again, we don't know what's going to happen. Maybe there is no big CRE crisis coming. Yeah, we'll see.
So you're continuing to invest into just the one REIT you've got, or you've got a few?
No, I've predominantly been buying Realty Income, ticker O, and Vici Properties, ticker VICI, just because I like that they are looking. Ed Pitoniak, their CEO, I really like him. Fun on the earnings calls. He wants to have them expand away from just owning the Vegas Strip and gaming into like experiential, like water parks, resorts, college stadium, different things like that. Different ways to make money. So I like that they want to grow, and he has a big vision, just not casinos, being the landlord for casino operators.
Yeah, I think I would for sure go for one of those two if I were to add a non-UK REIT into my portfolio. And of course, Realty Income, one of the ones that I loved as well because of the monthly pay-in dividends. Like that's quite nice to have that come through every single month into your portfolio.
They're expanding into Europe. They have a pretty good UK footprint. What's the Sainsbury's?
Sainsbury's, one of our supermarkets.
Yeah, that supermarket. They have a lot of property for that. They just opened up an office in the Netherlands. They are acquiring more property, so they are looking to expand further into Europe. So we'll see how that goes with them. But I like their aggressiveness, and they're not just going to be content with the U.S.
Yeah, it's a good point. So the same guy that asked that question asked you this one, which I believe he may have asked during
What's his name? What's his name?
His name's Alex.
Alex, what's up, Alex?
Yeah. So he wanted to know how to make time go faster as a minute feels like an hour. I'm guessing this was during work. Do you have any tips about making time go faster, Russ?
Thinking ahead, planning for the future, I guess. But honestly, you know what? I say that, and it's probably being in the moment, just trying to be in the moment, because we just don't know what's going to happen. And if it can happen any day, it can happen today. So we want to, for better or worse, I don't know. That's something I've been thinking about, because when I was younger, I used to look way ahead into the future. And when you do that, you kind of miss out on today. So I think that, I don't know. I could just be spitting a bunch of rubbish here. I've been waiting to use that word. So
I like that you answered that seriously. I like that. I was going down more the route of like listening to podcasts and stuff like that at work, but your answer was way more thoughtful.
Podcasts, I definitely do that. Although, I have tinnitus now, so there's a trade-off. See, there's a good and a bad to everything.
Yeah.
But it could also be
Truly.
from when I was 22 years old, standing next to a 20-foot tall speaker in a nightclub for 2 hours. That may have something to do with it also, but
maybe. Probably that. Okay, so our next question, we've kind of touched on this, but I'll ask it just in case you have any other thoughts and feelings that you wanted to share. So the question was whether you pay attention to the percentage allocation between dividend and non-dividend stocks in your portfolio, and whether there's a certain percentage that you like to make sure are dividend stocks. So we've kind of touched on the fact that you're in the majority, but do you think about it in terms of a percentage or just more the companies?
Not really. Just the companies, the businesses. I don't want to get too over allocated to any one business, which has happened. For those of you that don't know, I bought a share of PepsiCo a week for 100 weeks to get to 100 shares, and that got to be pretty big.
That's fun.
Yeah, it was interesting, and actually, one lesson from that taught me that intrinsic valuations aren't always right, because I had seen some when I was buying it at like $140 a share and thinking like, wow, it's way overvalued. And if I wasn't doing this little experiment, I probably wouldn't be buying here, but I'm going to go ahead and buy anyway, just so I can look back in hindsight and say like, was that good or bad and what happened? And now I wish it was $140 a share again, because Pepsi is pushing 200. It's like 191 now, but it was near 200 all-time high. And it's just, again, nobody knows what's going to happen. So I don't know. How do you feel about intrinsic valuations? Does it affect you a lot when you buy or sell, or when you invest?
Yeah, I'm kind of similar to you. And I think that, a bit of a tangent here, but kind of related, something that I really have learned recently is the valuation that perhaps a Wall Street analyst is given to a particular stock may not marry up with the valuation that you've come to give a stock. And they can be very different. And you've kind of got to understand what parameters other analysts out there are using. Because take Tesla, for example. Of course, there's this whole argument about whether Tesla is just a car company or are they actually doing way more. And it's being valued as a car company, right? Whereas my valuation of Tesla is very much not just based on them being a car company, but also everything else they're doing in terms of having a Tesla bot, AI, robotaxi, like all of these other things that are coming into it. So if I were to just look at the valuation that a stock market analyst would give, it would completely go against my own valuation of the company. Does that make sense?
Yeah, absolutely. Yeah, and it's
a hard one.
I struggle with it because alphaspread.com is one I've been using. I kind of farm it out to them just as an opinion, just as one more tool, because there's a quote. I don't remember what investor, some famous investor, just put a name on it.
Warren Buffett.
It wasn't Warren. I know it wasn't Warren, because he famously uses discounted cash flow, but he'll never release. He says some things are better not known to the public, meaning like he's not going to tell us what formula he uses. But the thing with intrinsic valuations is you have to project what's going to happen in the future.
Yeah.
And like they said, it's like looking through the Hubble telescope. If you turn it 1 inch to the right or left, you're looking at a completely different galaxy. Yeah. So it's kind of the same way. Like I've played with the numbers, and you make a 1% change and it just completely gives you a whole different number. So it's the way I'm looking at it, everybody, is if you go back and just use Coca-Cola and go back to 1995, it was probably overvalued in the late 90s, but from where it was then to where it is now, plus all the dividends it paid out, it almost doesn't matter if you bought it overvalued. So to end this thought, they say that the stock price follows earnings. So if a business is going to keep earning money and growing its revenue and increasing its profitability, year after year after year, well, the stock price is just going to follow. It's going to keep going up. Why? Because crazily, people want to own good businesses. So I think it really could be just that simple. Just looking for businesses that you think are just
good businesses.
Just going to be good. Yeah.
Yeah. And no one can, like we said, no one can predict the future. So instead of worrying about what could happen, find a good business that you think isn't going anywhere for a long time, has good future potential, and then just, do your research into that business and don't worry about all of the other noise that happens, because like you said, everyone has opinions and there's always going to be people that will disagree with what you're investing in and your investing strategy. But if it works for you, and it works for your age, your risk tolerance, and all of this other metrics that you need to take into consideration, then you've got to do you. And that's something I'm learning. I think that's really difficult when you're talking about investing and your portfolio on YouTube, because just naturally you're asking for opinions, aren't you? And everyone's got different opinions.
Absolutely. And when you just talked about Tesla, I remember thinking back now, when you hear somebody say, I've got 25 years on Wall Street and I'm telling you Tesla is going to go bankrupt, and then they just go to the moon. And I was thinking like, man, that he cost me, like $4,000. Well, no, he didn't cost me. I cost me because I was the one that sold. So at the end of the day, and it sounds cruel to say that, but it's your fault. Like if you buy or you sell something based on somebody else's opinion or advice, it's not their fault. It's your fault. So I'm sorry, everybody. I don't really like rain on anyone's parade, but
no, it's true. It's true for sure. It is true. Okay, this one is interesting. So this question from one of the Discord members is, what's one thing you'd have done differently if you could start your portfolio again, but they've specified that what they don't mean is you can't answer with, I wish I'd invested into Bitcoin, or something that, we now know. It's got to be more of a general thing that you would have done with your portfolio differently.
Just held the better companies more. Because going back to Peter Lynch, I definitely did that. I've trimmed the flowers and watered the weeds. There's been, again, just looking at my PepsiCo position, I'm up a lot on it. And I've felt like selling when it was in the low 180s, I felt like selling. And that's probably something I would have done different. There's been, like I said, United Health was one I sold. And it's just like, I look back now, I'm like, why did I sell that? Like all I had to do was just hold it. Didn't have to do anything. So I would say I wish I would have sat on my hands on the good companies, but the ones that I was down on, the bad, right? Because usually good companies don't keep getting crushed. Their stock price doesn't keep getting sold off. So one of the things I've noticed is the trajectory of good companies is, well, they tend to keep going up, and the bad companies tend to keep going down. So I would keep averaging down on the ones that are getting sold off for whatever reason. So I think that's probably one of the biggest shifts I would do, is just keep adding to those that are even at all-time highs, because chances are they're at an all-time high for a really good reason, and they're going to keep going in that direction. So that's probably the biggest one, I'd say.
That's really good. Yeah, I think so. What's your opinion on selling for a profit and then putting that money back into maybe a different position, or holding that money ready for more of a dip? Like, do you ever do anything like that, or are you just sort of hold?
Yeah, I've tried, but I guess I look at that as timing the market. And actually a sell. One of them I just did was Eaton Corporation, ticker ETN. I looked at the intrinsic valuations. It was like 15% overvalued. I had bought it during COVID in the 80s, like around 80, I don't know, $85 a share, something like that. But I was like, okay, you know what? I put the money into Nexstar Media, ticker NXST. So at least I put it into something I have a lot of conviction of that I think is undervalued. But the point being that I thought Eaton was really overvalued, and I didn't really pay attention to the company. They just kept earning money and going up. And this was, I don't know, maybe 3 months ago or something like that. I sold them around 180, and now they were like 210 this week. They just, if you look at their chart, it's stupid. It just keeps going up and up and up and up. And it just goes to show you, like, a good company just keeps being in demand,
Yeah. I guess it's hard, isn't it? Because a part of you, not you specifically, but a part of an investor's mindset is, let's just hold. This is going up. It's going to go up over time. I don't need the money right now. But then there's another part of you that's like, okay, this has gone up suspiciously high very quickly, should I trim this and just take some profit whilst it's at this height? And I don't know what the correct answer is. I don't know if there is one. For me, I tend not to take any profit because I just, like you said, I don't really want to try and time it and mess that up. But right now I'm wondering whether or not I should, with like my Palantir position, which is doing very, very well. And I'm wondering, should I be taking profit? But I mean, I most likely won't.
No, if they're still increasing, if they're still growing as a business and you believe in the management team, I wouldn't. I would just hold on to them. But yeah, okay, I will add the caveat that if you're unless you're invested in something like Carvana that got beaten down and had like 20% short interest, because then they're subject to short squeezes, and we see that they went from $4 in December to like $60 this week or 50 something silly. So it really does depend on the business because just because like you said, when that's what triggered it, you said suspiciously high. When I see Carvana, like, hey, weren't they supposed to be going bankrupt, like 6 months ago, and now they're at all-time highs almost or something? Like, what's up with that? Like,
what's going on?
Not right here.
Yeah. Right. Let's go over to the live chat. For some reason, my live chat on my screen isn't working, so I'm going to have to look at it on my phone. So if I'm looking down, that's why. So let's see what we've got here. We've got lots of hellos.
You're not on private chat, are you? Because there's like a private chat tab and then comments. So
I don't think so. Let me have a look.
I just know everybody because I host a live stream every Sunday night, so it's weird being on this end, but I'm enjoying it.
I'm getting the message that I think it's because I made the video private when we had to reschedule last week. So I think it's because of that. It's now a private video. But anyway, it's okay. I've got it here. So we've got a question for you, Russ, which is, it's actually a really good one. I like this one. What percentage of your monthly income do you invest, and how did you come up with that figure?
So this is interesting because the answer is I don't know, but I put 21% into my retirement account. So 21% of my income every week pre-tax. So before I pay taxes on it, goes into the 401k. And then I also have money I put toward kids' college. I put towards like $10 a week toward each kid's custodial account. We have an emergency fund. Then I put money into my brokerage account, my taxable account, and then the Roth. We can put up to $6,000 a year and max that out. So my rough estimate is probably around 30 to 35%. Although my wife and I keep telling her, I'm like, okay, we got to figure this out. And then all of a sudden I'm like the fish I'm like, but I got to make another video, or like, I got to do this. And I never take time to, I never take time to do it. So it's an important thing for sure, but I know it's over 21%, 100. So 100%, I know it's over 21%. It just sounded confusing, but I don't know. And I should. Bad on me. Bad dividend investor.
Well, it changes, doesn't it, as well throughout. I know for me, when I first started investing, I was able to invest quite a big percentage because my outgoings were quite small, and I don't have any children or anything like that, so I don't have dependents. But I imagine throughout my life, it's going to go up and it's going to go down, and it's just constantly going to have to be reevaluated for sure.
You don't even have any pets?
I did have a hamster, but not anymore.
Yeah, apparently the government frowns if you try to claim your hamster as a dependent on your taxes.
Oh, do they? I'll have to try that.
That's a joke. One night I was telling my buddies, I was like, I'm going to try and claim my cats as dependents on my taxes when I file. And
I mean,
you can't
they are
do that.
Expensive.
Yeah, I Googled it. It's called tax fraud. Don't try it. Anyway, sorry.
Great advice. Okay, the next question is, Charlie is liking the Smiths, by the way, Russ. So
yes,
you've got
Meat is Murder is just a classic album, and I did see him. How Soon Is Now, one of their dude. I had so many fond memories of dancing to that song at Exit in Chicago. Nobody's gonna know that but me, but yeah. Anyway. Yes.
The next question is, what platform do you use to invest? I use Trading 212. Is there a better one? So this is difficult depending on if you're in the UK or a non-UK investor. I personally use Trading 212, and I also have a portfolio on Vanguard. But I don't know, do you have any insight into different platforms that are available
I
over there
started
rather
out
than
I,
here?
st- I started out on Robinhood and
Yeah.
left them in 2019, mid 2019, because I didn't like the lack of customer service. Like I had questions.
Okay.
So
Yeah.
what I like with Schwab, and this was where I went to, is it's crazy, but I can pick up the phone and call and
Yeah.
talk to somebody and get a real live human looking at my portfolio and giving me
Yeah.
answers. So I would say as long as you can, there's some sort of customer service aspect that's pretty reputable. Well, I don't know. How's trading 212? Is there any
Yeah,
issues? Any?
I really, really like them. I was on the waiting list for quite a while because I think they got too much demand very quickly, and they had to sort of shut their new accounts for a while. So it was one that I wanted for a long time. Ooh.
I don't know what
um,
that's the Dapper Dividends World Headquarters. I thought we were
yeah,
going
I don't know
down
what
here for a
happened
second.
there.
Somebody moved a chair up there. Thank you.
All good, all good. I think choosing your platform is going to depend on firstly what you want to invest into. Because for me, I wanted to be able to invest in individual stocks as well as ETFs, and I couldn't do that on
Yeah.
Vanguard. So
Yeah.
straight away, I had to, find a platform that could do that. And then you've got to think about fees, customer service, what the user interface is like. Is there an app? Do you care about that? So many different things, and I don't think there's a one answer fits all here.
Yeah,
It
if
just
it fits
depends,
you.
doesn't it?
I know one of my friends, Harris, he has a podcast, One Penny at a Time. He uses SoFi. And I
Okay.
know a lot of people like M1 is really
Mm.
popular.
M1
But yeah,
Finance.
it's all
Yeah, I've
if
heard
you
of that.
like it, man. And I will say that Schwab can't, Robinhood has a really, really nice interface. Like it's too easy. It's like
Yeah.
candy or something. But yeah, Schwab is a little bit more of a learning curve. It's not. But at the end of the day, I was like, okay, am I on this for like how it looks, or am I on it for like the information and the stability of the platform? So, but yeah, it's all up to you. Try a few, read reviews. We have the internet.
Yeah. We do. We do. The internet's quite nice. Okay, right. We've got a question here. Did you buy any telecom stocks when it all had the bad press this week? I guess the question is, what are you doing about telecom stocks right now?
Yeah, I was gonna add a few more shares of AT&T. I put in for like $13.45 because I
Okay.
was expecting a bit of a dead cat bounce. I don't know why. It's not enough to make any kind of a dent, but I was just going to, and so no. The answer is no. I didn't, but I tried. I just didn't get my fill hit. That's all.
Okay. Nice, nice, nice. What else have we got then? Okay, this is a dividend portfolio question. So I'll throw this over to you. Do I have to reinvest the dividends into the same stock or in a different stock in the same portfolio to keep a portfolio balance? Does this affect results? So a few different questions in there, I think.
Yeah, of course it's going to affect results, but again, it's just all what that individual company does. So he's talking about DRIP, dividend
Yeah.
reinvestment plan, and all that means is when Coca-Cola pays you $1 in dividends, then it automatically gets $1 reinvested into more Coca-Cola. So you get little micro fractions of a share.
Yeah.
So it's gonna, yeah, of course it's going to affect it. It's all dependent on the company that you're invested in, but that's good and bad. If it's a good company, then they grow their dividends and it's going to, what we talked about, the dividend snowball is going to keep growing. So I don't do that personally. I don't like it just because
Yeah.
it's kind of like self-regulating though, because if you don't pay attention, then when the stock price is high and you get paid a dividend, it's going to buy more shares of the stock price while it's high, which means you're going to get less. But when it's low, you're going to buy more shares of it because it's low. So it's kind of good in that way if you don't pay attention. But yeah, I always joke around. I like to collect the dividends and then cut it with new cash and then like surgically redeploy it
I do
into
the same
something
as
else.
you.
Yeah,
Yeah.
something that I think is maybe a little bit better or,
Yeah.
something. Yeah. So again,
I do
it's
the
all
same
personal
thing.
preference. Yeah.
Yeah, and there's no right or wrong way, but I personally just prefer having the control over when that capital is deployed. Like you said, is it going to be deployed at an all-time high? Is it not? And also, I don't always want to buy more of what's paid me. Obviously, I have the dividend stock in my portfolio because I want it in there, but it doesn't necessarily mean that I want to put the dividends back into that stock at that time. I may want to use it elsewhere.
Absolutely.
Personally, what I do, but yeah, you can set it up like that, or you can just manually do it. What else have we got here? Got a lot of people talking about Tesla. Okay, Fast Eddie has asked, can you give your opinion on Palantir if you have one?
I don't have an opinion.
Don't have an opinion.
I believe I did a video on them like when my channel was first starting out, and I remember not liking them because A, they didn't pay a dividend, but B, they
Okay.
It looked really risky to me because I don't think they were cash flow positive. And yeah, but I mean, that's so long ago. Things change so rapidly. I really don't have a substantive opinion on Palantir.
Yeah, based on what you've just said, I think your opinion would be different now if you were to look at them again.
I literally have not looked at the company in years. And I do remember, though, saying that I think that they're trying to be the Lockheed Martin of cybersecurity for the government, something like that.
Yeah, they've got a whole government section of their business. Yeah. So, yeah, that makes sense. But yeah, I guess if it doesn't fit your portfolio, you probably haven't spent time looking at it. So I'm gonna have to wrap this live stream up very shortly because, funnily enough, I'm going to see the Barbie movie.
Oh, nice! You're not gonna do Barbenheimer. You're not gonna go see Oppenheimer after Barbie.
I want to, but maybe not like back to back. I've got a good question here, Russ. This made me laugh. Okay, someone said that you look very, very young. So can you tell them how old you are again?
45. I will be 46 on April 20th. So there you go, 420. That's my birthday. And no, I don't smoke weed, but I don't care if you do. I don't know. It doesn't bother me.
Someone else has asked if they can set up a trust fund for a cat.
Hey, you can try. I don't know. It's always worth the effort. Yeah. I don't know what'll happen. I don't know where you're at, but why not?
Why not? Exactly. Russ, do you have any parting wisdom that you want to leave before we wrap this up?
Well, I usually think of something a little snappier to say, but I want to ask you, who are you going to see Barbie with?
My partner.
Nice, good.
Yeah.
I'm assuming, or is no? I haven't. I don't want to pry too much. I just wondered as a guy, as a male myself, if I don't know. I hear it's okay though. I think it got some pretty good reviews. So.
Yeah, I think it's had so much money pumped into the marketing. So do you know what? Ask me tomorrow. I'm gonna I'll tweet you. I'll DM you on Twitter, and I'll tell you if it's any good, if it's worth watching.
Nice. So parting words. Well, I don't know. I can't think of anything right now other than my favorite quote of all time. The quote that really shifted my mindset was from, of course, Warren Buffett. And he said, if you don't find a way to make money while you sleep, you will work until you die. And that is, I have it framed. I see it every day to keep me reminding like, oh yeah, I need to even invest. And it doesn't have to be dividends. Like if Tesla's going up day after day and you're still making money while you're sleeping, it's a paper gain. You haven't received that cash, which, by the way, we could get into that. That's a whole different discussion with dividends. Like Warren Buffett, doesn't like to pay dividends. He'd rather buy back shares because then your ownership that's still a return of capital to shareholders when you do it that way. But the shareholder gets to decide when they want to sell and effectively pay taxes on those gains, where with dividends, you're paying that. If it's in your taxable account, you're paying income tax on those dividends.
Yeah. No right or wrong way, just what
life is plastic and fantastic, says Green Tree. I love it.
Did someone say that?
That's the Barbie. Dude, that's when I first started dating my wife. That song Barbie World came out. I remember that. Long time ago, everybody. Do you know that song, Barbie? I can't remember who sang it. Aqua World sang Barbie World.
Yeah, I do know. It's going to just be in my head now you've said that. Yes. I'm going to have it just on repeat. Maybe not a good thing. We'll see. But Russ, thank you for joining us. I hope you had a good I appreciate time. It. Good, always. Good. It's weird being on this side for me, and like you said, it's probably weird for you being on that side of the stream. So, bit of a trial run this one.
It is weird,
cool.
but I enjoyed it. Thank
you
you so very much for having me. I really do appreciate that. And take care, everybody. It's the weekend. Go have some fun. Do something to put a smile on your face that's not illegal or hurts anybody. Unless they're asking for it. I don't know. People are into BDSM, you know, that's my libertarian streak. Hey, if you want to be hurt and you're okay with it, then okay, you're over the age of 18. Good for you. But see what I mean? All these things flitter into my head, and you just give this guy a microphone and I'll just go for 45 minutes without taking a breath. Anyway, all right. So long, everybody.
Well, we'll end it on that note, because that was a weird one to end
strange.
on.
Very weird. Very strange.
Why not? But thank you everyone for tuning in. I hope you've enjoyed. If you've got any further questions or points, drop them in the comments, and we'll have to do this again.
Absolutely.
Thank you. And I'm gonna no worries. Yeah. Thanks for joining, Russ, and thank you everyone for coming to the live stream. Have a good rest of your day and your weekend. Bye-bye.